Well, don't look now, but earnings season is back in full force on Friday. You got a lot of big banks reporting their financials. I'm going to bring in Peapack Private Wealth Management Managing Partner, Senior Portfolio Strategist, David Dietze. David, I would say this is the most I think it is the most highly anticipated earnings season for banks in a long time because everyone's loading up. Banks have acted much better. They've got the all clear to buy back their stocks. So could the banks really give us a big bang to kick off this earnings season?
Yeah, absolutely, Charles. And they have so much to look forward to because I think we're going to see at the end of the last quarter some widening in that net interest margin, and that gives them a possibility of exceeding expectations. Plus, I think the holy grail is what they do with their loan loss reserves. Remember, out of a lot of caution, they ramped up all those loan loss reserves in the heat of the pandemic last year. But at this point, as we're starting to see signs of the vaccine coming out, as we're seeing this stimulus kick in, I think there's a good chance that they reverse some of that or at least reduce the amount that they're putting aside. That could give them a great opportunity to exceed expectations. And the way the banks go is often the way the market goes, Charles.
On that note, can you share with us some of your investment themes, some of the ideas that you like for 2021? Because it feels like there's a pretty significant shift in where the big winners will be this year versus last.
Yeah, absolutely. We're already starting to see it. And I mean, it stems from the fact that the growth stocks were up 38% last year. Value stocks were only up 2%. For me, my quintessential 2021 pick is Exxon. I want a greener environment as much as anyone, but it's going to take a decade to get there. In the meantime, you have the largest, best managed integrated energy company. Remember, it's not just taking fossil fuel out of the ground. They also have the largest refining operations in the world, one of the largest chemical operations in the world. But look, just a year ago, it was a $70 stock. So the COVID had brought it down into the mid-40s. While you're waiting for the world to reopen, collect that 7.6% dividend. Charles, are they serious about dividends? They've increased it for more than 25 years in a row. All eyes are on it to see if they can do it for the next year. I think they will.
It is a dividend aristocrat, although I do worry with this whole ESG theme, how many big-time money managers will buy the stock no matter how much value there is. But I do also want to shift gears a little bit because another theme from last year, the shorts got hammered. I mean, they got annihilated. In fact, according to Goldman Sachs, there's a basket of the most shorted stocks up 218% from the March lows. Any potential short squeezes on your radar?
Yeah, absolutely. I love investing in heavily short stocks. You can win two ways. If you just get a scintilla of news that the outlook is not quite as dire, that can get the stock moving north. And of course, once it starts moving up, then the shorts start to panic because they're starting to lose money on their trades. Their brokers may call in the margin loans and so forth, and that can really propel the stock. So the one I like, Charles.
Give me one name, David.
Yeah, AMC, quintessential COVID reopening stock here. The stock was $8 a year ago. Now it's $2, but it's not an internet newbie, Charles. It's the largest theatrical movie thing here and in the UK going.
I love going to the movies, so I hope you are right, my man. David, congratulations on the new job and the new title and all of the great stocks you picked for us last year.